Okay, guys, just gone to market on the US tech. Just put it into the group as well. Let me flick this over and we'll have a wee look. Right, this here, if we pull down into market updates, we can see it's gone in. Now, there's the sheet, but I'll pull it up on the bigger version, which is here, just so you can read it. Okay, right. So I'm looking at the US, which is pretty darn weak, which will put pressure on the US 100 to push up, and it's lost ground, adds weight to it going up. It's part of correlation. Okay, now I've checked it out. It reckons, we can see it here, that it's genuinely a buy. There's a bit of indecision at the top end, but it's a fair trade, about 40 pips, so buy it. Okay, so I bought it. All right, so get that out the way. Right, okay, so we're going to flick our drawings back on. I'm going to have a look, see where 40 pips is. Well, there's my measuring point. Up to about there is a half decent target. Okay, so what we're going to do is we're just going to pull that down into here. It says 40, but in and around that area, that's roughly where it is. 40 is probably about here. Okay, but let's just take all of these off. I've got the target in place, so that bit will look after itself while I'm doing this. Right, if I'm going to look at a market, the first chart I look at is this one. All right, now this is a completely blank chart. All right, just see me clean it off. So if I've got nothing else to work with, I can put daddy levels in. That'll give me some structure. But if I'm reading a chart, what I'm going to be looking at is this. All right, I can see a definitive top. I can see a definitive bottom. I would draw in a rectangle here, just like so. And I would color it in the direction of the trade. All right, so that would be red. All right, now I'm just looking at this as if it's a chart. All right, not gaps, because the charts have changed now. All these gap fills, they don't really happen too much. These are overextended candles or power shift candles, whatever you want to call them. Drop your Fibonacci in. Well, I suggest it started up there, came down to here, and I'm going to zone it out. Right. So let's zone this out. This is a good principle. So we've got that area and that area. Right. In between them areas, we can have some key level points. Well, you've got one here. Drop that in. I'll drop it in on just a blue because it is an hourly. I'll drop that onto there. And then this one onto here. Right. What I've created here is a clear trading arena based on a structural move. So this is closed. Where's it going? Well, we're targeting the top of the swing point. Okay. Why? Because that's the next part where it will stall. Now, what else have we got? Well, you can see there's a big movement here. Okay, so I'll be happy to stage down into that and then get out. So the box of pain, or where I would like to, if I'm wrong, will be in and around this area down here somewhere. So just mark that in black. All right. So I know roughly where I'm getting out. I know roughly where I'm staging into. I've got two structure points that I can work from. Brilliant. I've also got a bias. Why have I got a bias? Well, because I worked it out. There it is right there. So I've got all different elements looking, and I've done a multi-time frame analysis. Right. So the next part, let's go out to a higher time frame. What's happening? Well, the bigger time frame is actually this one here. Now that is encompassing all of this. All right. So is it going to tell me much more information? Not really. You know, it's just going to be widening up, but the key areas will probably be in the same place. So what it's actually showing me is this is pretty much range bound across this moment. Now that also goes back to this, and it explains why the bigger picture is a question mark, because there isn't any trend in it. It's going sideways. All right. Well, if it's going sideways and it's been to the bottom, then I expect it to go to the top. Adds weight to the bias. Take it down into 15 minutes. What have we got here? Well, again, strong drive, push. This can move backwards and forwards on its way back to where it came from. What else do we have? Well, we've got this here. What can that represent? Well, this can give us some more entry exits and structure to this point. 2 high points, bing bang boo. There's a good area of attraction as well. So we can drop in some extra ladder points, which is here, here, and here. Right. So I've got a 15-minute, I've got an hourly, and I've got 2 areas telling me what's going on. So what am I looking at this point on a 15-minute? Well, there's the 50. It's come down, it's found that area, and then it's gone beyond the 50 and it's pushing back to where it came from, which will be up here. And then that's what I'm banking on. That's what I'm looking to do at this moment in time. Don't need this fib. I've got all of the bounce points that I need. We've entered the market here on this surge, and that was at the start of the market. Very, very simple. We now just need to measure it out to get back up to here. Okay, so I'm going to put a couple of orders in and then just let this play out for a few quid. Okay, now it's not a difficult chart to work on, so just let me quickly do that just while I'm undoing this. Help if I was on the right bloody screen. Right, let's flick this on. Right, there we go. Right, just get rid of that. Put that into place. 5-minute chart, we'll watch that so you can see all the candles dance nicely and one thing or another, and you can see the range that we're going to work in. Nice and simple. Okay, so let's get the extra orders into place. So that'll be down to there, back up again. Right, okay, so kind of working down onto this zone here. That would be last point of entry. The guys know exactly how I do that. And away we go. It's gone through the second entry point, so I'm happy with that. I'll let it come back into it. So the price has to come up to tag it. And then I'm going to put the third one in underneath those bounce points. So if it runs down, hopefully it'll pick them up and then run back. Okay, there we go. Okay, so that's it. Right, I'm fully mapped. I'm ready to rock and roll. Give me a second. I just want to see if I'm at a 1-on-1 ratio. So I can put in where I'm wrong. So it's 132. So it's going to be there. Right, there we are. Box of pain. I don't want it to go beyond that red line. All right. Happy days, happy days. So I'm happy. Just need to run it out now. Catch you in a bit, guys. Okay, guys. The guys in the squad are following this as well. I'm going to kill this out. Bish bash. There we go. That's 471 added into the pot. Let me just make certain I've got my tickets off. There you go. I'm a bugger for forgetting to put my tickets in. It's not a good thing. And then there you go. That's the market done. Bear with me a second. I need to answer that. Sorry about that, guys. It was a rather bizarre phone call. Anyway, cut long story short. 815 on the day. Isn't bad. I could let this run, but it's getting to the end of the night. London's just shut. 15 minutes candle is just closed, and it's stretched to buggery. So why would I possibly hold the market any longer than I have to? And the answer is very simple. You don't have to. I have two targets. I have the initial target I put in, and I also have a monetary target. They smashed through that monetary target. So just take the money and be happy. It's as simple as that. Now, I'm pulled on my consistency all the time, and I'll tell you why I'm consistent. I never go to market without knowing what's happening. And what I mean by that is I do all the homework first. I go through my tool. I look at the multi-time frames. I'll look one stage up. I'll look one stage down. And I've got a good feel of what the general direction is. Do I get it right all the time? No, I don't. I do sacrifice trades, and I do it on a regular basis. But overall, when I'm day trading like this, I get in and I get out, and that's the end of it. And if I'm paid enough in the meantime, outstanding. And when you watch the Vanguard series, you'll see what the benefits of that is. So again, it's for the squad. So Casper and Ben were looking at this. I thought, well, I'll put my 2 penneth in, dropped in my sheet so they knew exactly what it was I was looking at. They knew I'm buying it. Video backs it up. We'll be going live tonight. They often ask me my opinion on charts. We go through it. And a lot of the time it plays out. And it plays out a lot of the time in front of us as we're doing it. It's the beauty. But the thing with the markets is you can't switch it on and expect to have a trade there and then. It doesn't work like that. Patience is a big element. And it's why I say to people who go, oh, you're going live, can we follow your trade? I say, no, I'm not giving you any signals. Because signals don't teach you shit, nothing. And if you want me to trade for you, why are you trying to trade yourself? It's kind of the question you've got to ask. I prefer to show you what the situation is, show you what I would do with it, and then you can build your own plan and make your own choices. I hope that came out the right way. Basically, I don't do signals. I'll show you how to do it. That's a better way of saying it. That's what we do in the Zoom calls. Anyway, like I say, did this for Ben and Casper. Little salute to you. I'm knackered because I've been at this since 6 o'clock this morning. 100% strike rate today, as you've just seen. My small accounts have all come in as well. Happy days. I'm going to have a couple of hours off, and then I'm going back to on Zoom tonight at 8 o'clock with the guys. And happy days. Busy bee, busy bee. So I'm going to have my coffee because we all know Scruffy likes a coffee. And see you all in the next one.